Hi, a very good morning. You're watching Trading Hour on CNBC TV 18. I'm Ekta Batra and with me is Prashant Nair. It's turning out to be a consolidatory day, at least for the frontline indices, while the mid-cap index is up around 0.4%. But we do have numbers to talk about. Mphasis reported what was a good quarter, and we have with us Nitin, Rakesh, the CEO and the whole-time director, and V. Suryanarayanan, the Executive Vice President and CEO of the company, who join in now. Morning, gentlemen. Nitin, first to you, if you could start by giving us some color around the company's performance. What have been the key growth drivers this quarter for you?
Good news is that the growth's been fairly broad-based. So if you look at our direct business, specifically direct core, I think growth was well contributed to by our existing clients, especially strategic accounts. We also saw, I would say, a decent traction in new client wins. And clearly, the Blackstone channel continues to also add to growth. So I think those three have been the engines of growth for the direct core business. Within direct international, the other element of growth came from digital risk. While on a year-over-year basis, that business is still headwinded, but we are fairly pleased with the quarterly performance. On a sequential basis, I think we managed to grow that business fairly robustly. And we are at the upper end of our expected stable revenue range for the year. So I think that was on the direct side. On the HPDXC side also, it's a couple of things that have happened that are contributing to growth. One, we announced that partnership back in May, and we're starting to see some conversions from that coming into the revenue line. And also, I think our core business across the other four HP entities, including DXC, also continues to see, I would say, decent traction. So I think we are fairly pleased with the broad-based growth, and we do think that we have the multiple vectors that we wanted to come into play, starting to play for us.
Okay, Mr. Rakesh, just staying with you, the banking, capital markets and information and communication as segments, in fact, have delivered strong growth. Is this sustainable according to you? And what's your sense of demand as well going forward?
I think there's obviously a lot of mixed commentary on the outlook for the banking and financial services sector, including insurance. I think from our perspective, there's no one straight answer for the outlook for the sector per se. I think it really depends on what part of the IT services value chain you're playing in. I think if you're staying focused on just the core IT or the traditional IT services, clearly the demand environment is muted. But as you start going closer and closer to consumer-facing tech, cloud, cognitive, application of analytics and data, I think there is a fairly robust environment for demand, as well as I think pricing is fairly stable. So I think it really is a question of where you play. And given that 72% of our direct deal wins this quarter came in new gen services, that's probably the reason why you're starting to see robust growth in our BFSI segment. On the other segment, which is Infotech, IT, I think that's really a reflection of what we're doing with a number of the DXC, HP channel entities. And given that we saw robust growth there, we're obviously seeing growth in that segment for us.
Mr. Suryanarayanan, can you give us a breakup of the margin expansion that you've seen? And what else can you do to grow margins further?
With respect to margins, I think we had already talked about the operational efficiencies which you're working on. That has helped us for the margin growth this quarter, apart from the overall revenue growth for the quarter. In terms of the outlook, I think we had clearly indicated we will be in the EBIT range of 14 to 16% for FY18, and we are quite confident we'll be in that range. The operational levers for further improvement is already in play. One on the utilization pyramid optimization, and also maybe the model on the fixed price, which also has made a needle movement this quarter.
Nitin, going forward, could you talk to us a little bit about the strategy in terms of going after deals, what kind, etc.?
The nature of the deals is a question of the client segment you're playing in. If you look at our existing accounts and strategic accounts, clearly there is a mix of small deals as well as some larger deals. I think what's worked well for us in that segment is the ability to create proactive deals, which may start small, but all digital programs then eventually take shape and gain in size. If you look at breaking into new clients, if you look at service transformation approaches, there is possibility to do new deals that are fairly chunky in size, and that's what we are seeing as well. And I think on the HPDXC side, it's a combination of small and big as well. So I think it's not one or the other. It's really a combination of various different types of deals. But clearly, we want to continue to focus on building the overall pipeline. And if our TCV win rate was about 80 to 90 million last year, we've already seen that move up to between 120 to 160 million this year. And if we can keep it above 100 systematically, I think that will clearly give us the acceleration we're looking for.
Okay, all right, Mr. Rakesh, we're going to leave it on that note. Thanks very much for joining in, speaking with us. So that is Mphasis. The stock is up around 6%, which has in fact, been boosted by that margin improvement, which they've seen 15.5% versus 15%. And you did hear the management talk about it as well. We'll take a break now, but up next, we're going to be talking about the top trading bets. Sandeep Wagle is with us and Krish Subramaniam with